Well, African economies are seeing rapid growth underpinned by a strong demand for infrastructure. One expert says it's crucial for Africa-based pension funds to know about the benefits of investing in infrastructure projects on their own turf. Investment Director and African Infrastructure Investment Managers Romain Py joins us now from our studios in Cape Town. Romain, thanks so much for your time today. When you say that African pension funds should invest in their own story, what do you mean by that?
I think, we've seen across the world the case for infrastructure investing. What we are seeing in Africa is a large pool of capital, long-term capital, which is under management by local investors. And I think, to get the benefits of economic growth on the continent, we need to harness this capital and make sure that it's primarily employed to build long-term economic infrastructure.
Currently, where is that capital being invested?
I think there is a number of regulatory constraints. So I think in most of the country, especially outside of South Africa, the prime source of investment will have been government bonds, and the second one locally and internationally. So U.S. Treasury bond are very familiar features. We're seeing also a number of investment in, I would say, international property market as maybe as the third source of investment.
So in the infrastructure space, would you say then that it's largely the development finance institutions like the DBSA, the African Development Bank, for example, that are investing there? Who's investing in infrastructure on the continent?
I think the picture is a bit more complicated. So you could say in South Africa, it's definitely dominated by local institutional investors because the market is very sophisticated. Investors are familiar with the asset class as infrastructures. There is a number of precedent, a regulatory framework which is receptive to this kind of investment. For the rest of the continent, maybe except Morocco and Egypt, I think it's fair to say that most of the capital will be coming from development finance institutions and other pool of international capital.
And when we're talking about infrastructure, I think let's maybe look at where the opportunities are. We were having a conversation a few minutes ago with the World Bank, talking specifically about skills. We're talking about rapid urbanization on the continent. So what type of infrastructure investment do you think there are opportunities in at the moment?
I think for the time being, the key focus remains on power. The level of access to electricity remain pretty low across the continent. Now, what we're seeing is a more shift from what we say off-grid, so on-grid power to off-grid power, and also a similar shift from thermal to renewable. So power remain a big sectors. Transportation has been underinvested for a number of years, and we are seeing a number of programs in terms of road development, but also new ports and new airports being developed. I think urbanization is definitely a key driver. But I think in terms of investing into urban transit and other mass transport system require maybe some changes in terms of, especially on land and on some policies.
The investment, of course, comes a risk versus reward. So how would you go about managing and mitigating the risks of this type of investment?
I think there is maybe a risk perception which the continent needs to deal with. What we're saying is there is an asymmetry between the perceived risk and the actual risk. And what we're saying, if we look simply at the market, most of the assets we are looking at are having hard currency revenues, so no currency risk. The contractual structures are very robust with conservative debt structuring, and often people will ask for some of the risk to be mitigated through the use of political risk insurance or other type of instruments. So when we look compared to other regions of the world, we think that the risk-adjusted return is very attractive.
I imagine, though, that because the African pension funds are based on the continent, that they would be in a much better position to assess those kinds of risks and be able to mitigate them in certain ways.
In a way, yes. Just to give you one, maybe just a number. if we look Moody's research on the project finance, the level of default rate on African project finance transactions, so mostly infrastructure, is the lowest in the world, below Latin America, below Europe, below Asia, below the US, and it's around 1.5%. Now, I think to catalyze the local capital into infrastructure investing, I think a number of conditions need to be there. The first one is to have a sizable asset under management by long-term institutional investors. South Africa is blessed into that. In a number of countries, we are not seeing the critical mass in terms of pool of assets for the pension fund to start diversifying into infrastructure. The second thing is to have the right regulatory framework to encourage this insurance company, this pension fund, to invest into infrastructure. Often they are prevented to because the assets are in a way unlisted, so perceived as riskier than that. So there is a question of education to be done with government, regulator, central bank, and other players. Right. And the third one is the familiarity of the local investors with the infrastructure asset class. And I think that's again where something people need to engage, and we're seeing this level of engagement increasing across the continent. We've seen Morocco getting definitely ahead, and Nigeria, Kenya are trying to follow the South African example into that.
All right, we'll leave it there. Thanks for your time. Today, Romain Py is the director at African Infrastructure Investment Managers. After the break...